Experts in Australia are very split about one important question. Is Australia's housing bubble about to pop? This question has caused a lot of heated debate in the country. Understanding the many factors that affect the housing market is important for both people who want to buy a house and people who want to invest. So, without further ado, let's get started. So, a housing bubble is basically an economic condition when property prices rise quickly and significantly due to speculation, high demand, and other factors, but then drop quickly and significantly again. A lot of different things have a big impact on how a housing bubble grows and eventually bursts. For example, more people wanting to buy homes, a lack of homes for sale, events outside of Australia like the global financial crisis, and the Reserve Bank's interest rate policies. Each of these factors is very important in shaping the real estate market and may help a home bubble form. If there is a housing bubble in the Australian real estate market, house prices could go down. This is sometimes called a correction, fall, or crash. Right now, Australia's housing market is marked by skyrocketing home prices, which are caused by things like population growth, a lack of homes for sale, and a strong demand. As property prices continue to skyrocket, it's important to understand what a housing bubble is in order to fully understand the current state of the Australian housing market. But the most important question still stands. Is Australia really in the middle of a housing bubble? To answer this question, we need to take a close look at the current state of the Australian housing market. We need to look at things like changes in property prices, factors that affect demand, and problems with supply. The International Monetary Fund, IMF, says that Australia has the third highest number of house prices to income in the world. Also, home prices in a number of wealthy nations are well above the historical averages. The current state of the Australian housing market is still affected by things like population growth, a lack of homes for sale, high demand, historically low interest rates, buyer confidence, and the ease of getting credit. We just like to briefly pause here for a moment to give you a polite reminder that if our content is to your liking, please don't be shy and feel free to show your support by clicking that subscribe button. It really helps. Now, coming back to the topic, it seems that there are problems in the Australian home market as well. There are some risks, like the fact that house prices might not go up at the same rate as interest rates, as central banks normalize monetary policy. Another risk is that the home market could go through a big correction. It's important to learn more about property price trends, demand factors, and supply challenges in order to get a full picture of the Australian housing market right now and its future possibilities. Residential property prices in Australia have gone up a lot in the past few years. In some areas, prices have gone up even more than all-time records. Even so, experts think that this rise might slow down in the coming months. For example, the National Australia Bank, NAB, thinks that prices will rise less quickly in the second half of 2023, but will still rise 4.7% by the end of the year, based on how much they have grown so far. There are clear differences in how housing prices rise from one region to another. In the 3 years ending in 2021, the median house price rose by 43% in Sydney, 41% in Melbourne. Average house prices rose 43% in Brisbane, 41% in Canberra, and 62% in Hobart. The IMF says that Australia's house price to income ratio is still high, even though property price growth has slowed. This, along with the fact that there are 25 to 30% fewer property listings now than there were a year ago, suggests that the Australian real estate market may still have room to grow, though maybe at a slower rate. Movement of people, low rental vacancy rates, and government assistance programs are some of the things that drive the desire for housing in Australia. Migration has caused more people to need housing, which has led to a lack of homes and higher rents. Also, more people means more competition for local renters in the rental market, which drives up rents and affects property values. Because of these reasons, property prices are under a lot of pressure, so buyers and investors need to carefully consider the current state of the market. As demand keeps going up, it's more important than ever to keep an eye on the Australian housing market and figure out how these factors may affect house prices. The Australian housing market is having trouble with supply right now because there aren't enough new building projects. There are problems in the construction industry and prices are going up. In capital towns, there aren't many properties in good locations and not many big new building projects are planned. The construction industry has had to deal with a lack of workers, supplies, and good weather, as well as the possibility of building companies going out of business. It is thought that between 190,000 and 200,000 homes need to be finished in order to handle the growing population. The difference between supply and demand in the Australian housing market makes things even harder for buyers and sellers. This is why it's so important to keep an eye on the market and change with it. Australia has had a different number of housing bubbles over the years, each with a different level of seriousness and effect on the economy. By looking at Australia's median house prices over the last 50 years, we can find trends that help us understand how things are now. In the 1890s, for example, real estate prices in Melbourne dropped by more than 50%, while prices in Sydney dropped by 36%. By looking at these past events, we can learn a lot about how the Australian home market is doing now. The possible bust will be worse if the real estate boom is bigger. For example, in Australia during the Great Depression, official house prices fell more than 25% from their highest point. However, because of high deflation at the time, the real price drops were much smaller. By looking at past housing trends, we can better understand the forces that are at work in the market now and be ready for changes that might happen in the future. It's important to remember that each housing bubble is different and was caused by different things. Looking at past bubbles can help you understand how the current market works. So, while history can teach us something, it's important to stay alert and keep a close eye on how the Australian home market is changing all the time. Different experts have different ideas about what will happen with the Australian housing bubble. Some say prices will drop significantly, while others say the market will stay strong and keep growing, albeit more slowly. A number of experts have said that Australia is currently going through a housing bubble, citing data that makes people wonder when Australian house prices will fall. This group uses things like higher property values, stricter loan rules, and possible interest rate hikes as proof. But some experts say that the Australian housing market is not in a bubble and that prices may keep going up at the same rate as incomes. In the end, no one knows what will happen with the Australian housing market in the future. People who are buying a home or investing in real estate should carefully think about these different points of view when making decisions. Interest rates that go up can have a big effect on the housing market because they make it more expensive to borrow money and might make people less interested in buying homes. The current trend in Australia of rising interest rates may cause property prices to rise more slowly and property price increases to slow down. For example, the Reserve Bank of Australia's cash rate has been going up, which means that borrowing rates for both buyers and investors are going up. Most loans in Australia have flexible rates, which means that changes in interest rates can directly affect how much you pay each month on your mortgage. It might not be clear on how variable rate hikes will affect the Australian housing market for another 2 to 3 months. But investors and home buyers need to be aware of this risk and make plans appropriately. But it's also important to remember that choices about interest rates can be affected by many things, like the state of the global economy or the politics in your own country. Because of this, it is still hard to say where interest rates will go in the future. This means that both renters and investors should keep a close eye on the situation and change their plans as needed. Government policies, like programs that help first-time home buyers and different land tax choices, can have an effect on the housing market by raising demand and property prices. For example, in New South Wales, government programs and tax breaks for the first-time home buyers have made more people want to buy homes, which has raised demand. Australian property owners can also get negative gearing on investment homes, exemptions from capital gains tax, and means tests on homes they live in themselves. These tax breaks can make more people want to buy homes, which can have an effect on property costs. It remains to be seen how well these government strategies will help the problems facing the market right now. As the Australian property market changes, it's important for buyers and investors to know about new government policies and how they might affect the market. For similar content, feel free to have a look at some of the other videos on your screen.